stuff.
Well, we are back with a deeper look at the financial ripple effect from the Supreme Court's decision to reject the student loan forgiveness program. The High Court ruling that the Biden administration overstepped its authority, overreaching in trying to cancel or reduce student loans for millions. We're joined now by financial expert Chris Mediate of Mediate Financial. In just the last hour, we actually heard from President Biden about his counter plan after he got blocked in this landmark decision. I want to get to that announcement that he made, but first, what happens next for the borrowers? What should they look into when it comes to their federal student loans and the repayment plan, the amount they have on their bills?
Yeah, right now, the number one thing they should be doing, or should have been doing, Lindsay, right, is how much are they going to pay back? What are their options? They should be going and looking at these calculators. They should be looking at what types of options they have to pay back. Income sensitive, income driven. Do they have forgiveness? Are they going to extend it to a 15, 20 years? So they need to look at all the options that they have now and make sure that this really fits their budget. They need to start wiggling around. So if we don't know what we're paying, right, we're going to be in big trouble at this point because they are starting. They're going to start in October.
Okay, and so let's say you're not making that much right now. You think this is going to be a little too much for me to take on each month. Can you get it tailored to the paycheck that you get in the mail every month?
You can. So income sensitive, income driven plans are probably right now one of the best options, and even President Biden came back now. They're going to try to revamp that a little bit. So his option was to do maybe 5% of income. Okay, so if you can't pay it, there's also this. Look at deferment again or forbearance, because you have an opportunity to go ahead and appeal, show your situation that you can't afford it, and maybe the student loans will be able to work with you again for 6 months. They'll be able to say, look, if I don't have an income, I might not be able to pay this. They will work with you. So you've got to start communicating, and I would start communicating that now.
What's the average monthly repayment rate? What's the amount you're seeing mostly with people?
So the average loan, depending on what you're looking at, right, is about $393 a month.
That's pretty steep for some folks' income.
Well, when you go back, it's like house payment.
Yeah.
Right? Car payment. So yeah, it's a big deal. Yeah.
So let's talk about what the Department of Education could do. The president said he wants to remove the threat of default or having this hinder your credit rating.
Yeah.
So would that likely cover everything or just not the interest? Does this cover everybody involved?
So I think it's the people that, look, if I'm missing a payment, I'm in financial trouble. Okay, they have the option to make it right. So he's saying, look, if you miss payments, if you're trying to get yourself straight, we're not going to report you for 12 months to the credit agency. So you have these options that he's trying to work with people that are going to struggle to go back. Remember, this was big on his agenda, was to help people. This comes back to this whole student loan issue is an issue. And it's going to affect everybody, so at least somebody's taking steps to go, look, we're going to try to help you. And so it is going to be a big deal with this new 12-month thing that's going to help. And I think revamping the system as a whole and those payment plans is going to be really big for people. They're going to have to start paying this back. Let's make it help.
Okay, now that we know that there are 43 million borrowers in our country right now, they were not spending this money on student loans. They might have been spending it somewhere else for the past few years.
Hopefully wisely, Lindsay. Hopefully.
Well, but you can't assume. So does this potentially impact the economy, and what are you expecting to see over the short and near term?
So it's going to affect the economy big time. Think about this. Were people saving it? So when I say wisely, what were they doing? Were they trying to pay the debt back? Were they not able? So if they're not, so what are we built on in the United States? Our economy is run on spending. So now all of a sudden we got student loans. It's going to cut our ability to do things. It's going to electronics, any retail. All our industries are going to probably, in the short term, at least feel the effect of that, because again, people are going to make a choice. Am I buying clothes? Am I buying TVs? Or am I having to pay back my student loans? It's going to make a big impact in spending. And look, we're sensitive right now. We're in a situation, we're not sure if we're at a tipping point of a recession. This certainly isn't going to help.
Yeah, and this is all at the same time that we could see more rate hikes too from the Fed.
Well, it's coming.
Yeah.
I think it's coming. Inflation is still here.
All right. Well, great to have you here. I know we'll be talking about that one probably in the next few weeks.
Guaranteed.
Great to have you with us. Thank you.